Human resource aspects of performance management. Human resource aspects of performance management. Introduction to HRM. Reward schemes for employees and managers. Accountability issues arising from performance measurement systems. Management styles. This chapter looks at the link between human resource management and performance measurement and considers the impact of the employee reward system on the behavior of employees and on the performance of the organization as a whole. Introduction to Human Resource Management, HRM. HRM is the strategic and coherent approach to the management of an organization's most valued assets. The people working there who individually and collectively contribute to the achievement of its objectives for sustainable competitive advantage. Armstrong. HRM includes the recruitment of employees, the development of policies relating to human resources, and the management and development of employees. Importance of human resources. An organization uses HRM to ensure that it has the correct people in place to fulfill its strategic and operational objectives. People are fundamental to an organization. Strategic significance. The creation and fulfillment of the strategy relies on the skills, knowledge, and creativity of the people. Operational significance. Successful completion of a task relies on having employees with appropriate skills and abilities to carry out their work. Reward schemes for employees and managers. A reward system refers to all the monetary, non-monetary, and psychological payments that an organization provides for its employees in exchange for the work they perform. The importance of target selection. It is important that appropriate targets, performance measures, are set for the employee. Targets should be relevant to the organization's overall objective. Achievable. Employees may be unmotivated if they consider targets are very difficult or impossible to achieve. For example, 0 defects may be seen as impossible. However, it is worth noting that the same may be true if targets are too easy to achieve. Controllable. The individual will be unmotivated if they feel they can't control the target set. For example, a production worker may not be responsible for defects if poor quality materials are purchased. Prioritized. Employees will be overwhelmed and hence unmotivated if they are set a large number of targets. Rewarded. Employees should be rewarded for achieving the target or targets set. The purpose of reward systems. There are a number of purposes of reward systems. To ensure the recruitment and retention of appropriately skilled staff. To provide a fair and consistent basis for rewarding employees. To motivate staff and maximize performance. Reward schemes and employee motivation. A well-known theory of motivation is Maslow's hierarchy of needs. Maslow's hierarchy of needs. Self-fulfillment. Related aspects at work. Challenging job. Creative task demands. Advancement opportunities. Achievement in work. Ego. Related aspects at work. Merit pay increase. High status job title. Respect of others. Social. Related aspects at work. Compatible work group. Friendships at work. Safety or security. Related aspects at work. Job security. Fringe benefits. Basic or physiological. Related aspects at work. Basic salary. Safe working conditions. Maslow stated that people's wants and needs follow a hierarchy. As employees become progressively more highly paid, monetary rewards become less important as other needs, such as recognition and an ability to achieve one's potential, become more important. To reward performance through promotion or progression. To control salary costs. To comply with legal requirements and ethical obligations. Methods of reward. Employee rewards fall into 4 categories. Basic pay. This is the minimum amount that an employee receives for working in an organization and is determined in a number of ways, such as market rates or job evaluation. Performance-related pay. Pay is based on the level of performance. Rewards may be based on individual, group, or organizational performance, all of which aim to motivate employees to work harder. Benefits. A wide range of rewards other than wages or pensions, such as company cars or health insurance. These can provide additional incentives at a lower cost and can be designed in a flexible way to suit the individual employee. Executive Share Options Schemes. An Executive Share Option Scheme, ESOS, gives directors the right to purchase shares at a specified exercise price after a specified time period in the future. Types of performance-related pay. There are a number of different types of performance-related pay. Piecework schemes. A price is paid for each unit of output, often viewed as a fair system, but quality control will be required. Individual performance-related pay. A pay rise or bonus is given to an employee on achievement of pre-agreed objectives or based on the assessment by a manager. Group performance-related pay. Rewards are based on the achievement of group targets. Encourages teamwork but may not be seen as fair by employees. Knowledge contingent pay. For example, an accountant may receive a bonus or pay rise on passing their ACCA exams. Commission. Normally used for sales staff and is based on a percentage of their sales. Can motivate staff but may lead to short-termism and manipulation of results. Benefits and problems of linking reward schemes to performance measurement. Benefits of linking reward schemes to performance. By tying an organization's key performance indicators to a scheme, it is clear to all employees that performance creates organizational success. Targets that are achievable, controllable, and prioritized give individuals an incentive to achieve a good performance level, since they know that this will be rewarded. Schemes based on shares can motivate employees or managers to act in the long-term interests of the organization. Effective schemes also attract and keep the employees valuable to an organization. By rewarding performance, an effective scheme creates an organization focused on continuous improvement. Potential problems of linking reward schemes to performance. Employees may become unmotivated if they feel that they were penalized financially for circumstances outside of their control. For example, an employee may have hit their quality target but did not receive a reward because the company's annual performance was poor, or if they consider the targets to be too difficult to achieve. Employees may become highly stressed if a significant proportion of their income is performance-related, or if they are set numerous and perhaps non-prioritized targets. Employees may prioritize the achievement of their reward, which may impact their risk appetite. Employees may become too cautious and risk-averse, or conversely, they may take bigger risks. Accountability issues arising from performance measurement systems. In order to ensure that an employee is motivated to meet the performance measures targets set, the targets need to be clear, smart, and linked to controllable factors. As mentioned previously, employees will be unmotivated if they feel they are penalized for circumstances outside of their control. Management styles. Hopwood identified 3 distinct management styles of performance appraisal. The style needs to be considered when designing an effective performance measurement system. Budget-constrained style. The manager's performance is primarily evaluated upon the basis of his ability to continually meet the budget on a short-term basis. The manager will receive unfavorable feedback from his superior if, for instance, his actual costs exceed the budgeted costs, regardless of other considerations. Profit-conscious style. The manager's performance is evaluated on the basis of his ability to increase the general effectiveness of his unit's operations in relation to the long-term purposes of the organization. Non-accounting style. The budgetary information plays a relatively unimportant part in the superior's evaluation of the manager's performance. Characteristics. For budget-constrained, pressure to hit short-term financial targets. For profit-conscious, focus on long-term performance. For non-accounting, little emphasis on financial performance, looking instead at non-financial aspects. Performance measurement systems. For budget-constrained, short-term financial performance is measured using, say, ROCE or annual gross profit. For profit-conscious, measures of long-term profitability will be used. For example, the net present value (NPV) of a project over its entire life may be used when making decisions. For non-accounting, non-financial measures such as customer satisfaction, employee morale, energy or water usage, or innovation may be used. Advantage. For budget constrained, should ensure short-term targets are met. For profit-conscious, gives flexibility to go off-plan if justifiable and should help in meeting long-term profitability targets. For non-accounting, targets may be more meaningful and motivating to staff and may help to attract staff and retain staff. Disadvantages: budget constrained, stress for employees and difficult working relationships. Profit-conscious, may ignore non-financial aspects such as ESG issues. For non-accounting, financial implications of behavior may be neglected, both short-term and long-term. Chapter Summary: Human Resource Aspects of Performance Management. Introduction to HRM. Definition. Importance. Reward schemes for employees and managers. Definition. Importance of target selection. Purpose of reward systems. Methods. Performance-related pay. Linking performance and rewards. Accountability issues arising from performance measurement systems. Management styles.